Hello everybody, welcome to the video on KYC interview questions and answers from CareerRide. KYC, that is Know Your Customer, is one of the most important processes in finance and business world today, where financial and other finance-backed crimes are on a continuous rise. These KYC professionals ensure that they board the customers with the right intention to work with them. The potential employers for these professionals can be places like banks, credit unions, payment processors, investment firms, insurance companies, fintech companies, government and regulatory bodies, consulting firms, legal firms, MNCs, e-commerce companies, NGOs, etc. And the type of positions that these KYC professionals can work in are KYC officer, KYC analyst, compliance officer, compliance analyst, AML officer, onboarding specialist, risk analyst, due diligence officer, regulatory compliance specialist, etc. As digitization in business increases, will increase the number of business and financial crimes, making these KYC positions all the more important. In today's video, let's see 13 basic questions on KYC that are usually asked at these interviews. If you're really serious about cracking your next interview, make sure you watch the complete video without skipping any parts of it. Ready? Fantastic. Let's start. Question number 1. What is KYC? Now see, this question is an icebreaker for the interview and the one with the highest chances of being asked. To answer this question, you can say, KYC stands for Know Your Customer. It is a process by which banks and other regulated companies get to know the identity of their customers. This includes details like their names, address, date of birth, and identification number. For corporates, these details would include the information about their business also. The KYC process was brought in so that the services of any bank are not misused by anyone for antisocial activities. The KYC procedure is carried out while opening the bank accounts, requesting a credit card, loan, etc. And these KYC details need to be updated periodically. For individuals, 6 documents have been officially notified by Government of India as acceptable proof of identity. They include the passport, driving license, voter's identity card, PAN card, Aadhaar card, and NREGA card. These documents are termed as officially valid documents, that is OVDs for the KYC. Okay, so the next question here is to test your domain knowledge. Make sure you are prepared to answer such questions also. And the question is, what do you know about Central KYC Registry? This Central KYC Registry is a centralized repository where the KYC records of customers are stored and managed securely in a standardized way. The main advantages of maintaining such a repository are, number 1, it streamlines the KYC process, reducing the redundancy and enhancing the efficiency of the whole process. Okay? Question number 3. What is Customer Identification Program? This Customer Identification Program is one of the most important elements of the KYC process. It consists of steps like collecting the information about a customer, verifying it, creating and maintaining the records, and notifying the customer on successful completion of KYC. Moving on to question number 4 now. What is customer due diligence? So, before onboarding a customer, the banks carry out a background check and risk assessment to ensure that they are onboarding a right kind of customer and the risk profile is well understood. This process of verification and risk assessment is called as CDD or customer due diligence. CDD is the heart and soul of KYC and AML process. Now see, what most of the candidates would do is they would stop their answer just here. But if you want to make your answer more appealing to the interviewers, provide some more details, such as there are 3 types of due diligence conducted by these financial institutions. The first one is standard due diligence, which ensures that the institution collects sufficient information to understand the customer's identity, business activities, and potential risks, facilitating the compliance with regulatory requirements. This type of due diligence is carried out for majority of customers who do not fall under low risk or high risk category. The second type is simplified due diligence. It applies to low risk customers who require less stringent identification and verification processes. The focus here is on collecting basic information and periodical transaction monitoring. And the third one is enhanced due diligence. Thorough investigation is carried out here because the customers here are high-risk customers. It is highlighted by in-depth risk assessment, extensive background checks, verifying the source of funds, and continuous transaction monitoring. So you see, what these type of detailed answers do is they help you stand out of the crowd. And this is what separates good candidates from everybody else. But these type of answers do not occur to anybody on the spot. They require preparation. Okay, so now we just talked about high-risk customers. And your next question could be about them. The question could be, who are high-risk customers? To answer this question, you can say, high-risk customers are the individuals and entities who have higher chances of getting involved in money laundering activities, financing terrorism, and other financial crimes due to the social, economic, political, or geographical advantages they have. These can be politically exposed persons who hold the positions themselves or are the family members or close associates of such people. They can also be people or businesses from countries infamous for such activities. Customers from high risk industries like casino, precious stones and metals, non residents also fall in high risk category. Okay, so let's move on to another important question for these KYC positions. And the question is, who is an ultimate beneficial owner? Now, this ultimate beneficial owner, usually referred to as UBO, is someone who has the ultimate control over a business or activity, and he is the one who derives the most significant benefit from whatever is happening. This person may not even own the title directly or be the legal owner of the business if you look at the documents. Still, he is the one who is most benefited. UBOs may exercise their control through intermediaries like trusts, non-profit organizations, etc. And as I said earlier, just looking at the documents may not even give you an idea about the UBO. It requires a lot of due diligence to identify him. As per international AML standards, UBO is someone who owns more than 25% of the company's share or voting rights. Okay, so you see, this kind of in-depth knowledge about your domain makes you really an appealing candidate for any interviewer. Question number 7. What are some of the red flags to look out for during KYC? Now see, this question is very, very important because as a KYC officer, you are going to be the first person to understand how risky can working with a particular client be for your business. Some of the common red flags to be careful of during KYC are: number 1, suspicious documents. Documents that look forged, are outdated, or carry discrepancies in information, or if the customer is not cooperative during the due diligence process. All of these are the signs that there may be something wrong. The second thing is unclear sources of funds, where you are not able to establish any relation between the depositor and the beneficiary. Fund coming from high-risk geographical locations also come under this category. The third red flag to look out for is when the ownership structure of the company is not clear or there are very frequent changes in the ownership. You must be very, very careful here. The next thing is unjustified cash deposits or withdrawals or frequent deposits that are just below the threshold. Involvement of too many intermediaries in the payment is also a red flag. And lastly, high-risk customers, such as the ones we discussed in one of the previous questions, are always the ones you should keep your eye on. Okay, now see, the process of conducting the KYC for different types of clients is very different from each other. And that is why the next question is again very, very important. Pay attention. The question is, how do you handle KYC for corporates? To answer this question, you can say, the difference in the risk profile associated with different types of customers needs a KYC processes to be completed very differently from each other. For example, in case of corporates, you would require details like legal name, registration number, registered address, and contact information for customer identification. To verify the existence of the company altogether, you would require documents like certificate of incorporation, memorandum, and articles of association. During customer due diligence, you would need to identify and verify the identities of key individuals involved in the business. For example, the directors, significant shareholders, and ultimate beneficial owners. You would also need to understand the nature of the business, sources of funds, and purpose of the account. Certain other documents you would need to look into are corporate structure chart, financial statements, or annual reports, information about the company's operations, products, and services, etc. So you see how in-depth is this process of conducting the KYC for the corporates is when you compare it to the individuals. And this is because of the amount of risk associated with this type of client. Okay. Question number 9. What is a cash transaction report? Now, this cash transaction report is a document that reports the cash transactions beyond a specified threshold limit. It is required to be submitted to the regulatory body by the financial institutions. Monitoring cash transactions is a very big way to catch hold of the money laundering activities, tax evasion attempts, terrorism financing, and other illegal activities involving cash. Indian banks require their CTRs to be submitted to the Financial Intelligence Unit, India, that is FIUIND. Okay, let's move on to question number 10 now. What is a suspicious activity report? This suspicious activity report is a report that the financial institutions are bound by the law to file with the regulatory authorities when they suspect instances of money laundering, terrorist funding, or other such things. If the banks notice transactions that do not match with the customer's profile, SARs get triggered automatically. These can be cash transactions just below the threshold or to a suspicious location or party also. Authorities are provided with all the identification details of both the parties to carry out the investigation. Financial institutions maintain high confidentiality while filing these SARs. They also get legal protection so that they are not scared of reporting such transactions to these regulatory bodies. So this is again a very important type of a report that the financial institutions file with the regulatory bodies. And as a KYC professional, you must be aware of them also. Okay, let's move on to question number 11 now. What's the basic difference between source of funds and source of wealth? Now see, when you talk about source of fund, you're talking about the origin of specific funds used in a particular transaction. But when you talk about source of wealth, you're talking about the history of how this wealth has accumulated with you over the years. Source of fund being specific and immediate helps detect the money laundering activities, while source of wealth helps you understand the client's financial background and their risk profile also. Okay, so this is the basic difference between source of funds and source of wealth. Okay, and finally moving on to the last question for today's video. What are some of the popular technological trends in use in KYC? Now see, rapidly evolving technological developments help in improving the efficiency, accuracy, and compliance every day. Some of the popular trends that you can talk about are: number 1, digital verification of identity, where the biometrics like fingerprints, iris scans, and facial recognition are used. At the same time, popularity of eKYC has reduced the need for physical presence and documentation. Then there's an increasing use of AI and ML, that is artificial intelligence and machine learning algorithms, in analyzing the risk profile of a customer. This helps to detect any fraudulent activities. Verification of KYC documents has also become easier and faster with technology. The third technology that you can talk about is blockchain technology, that has improved the overall security of KYC data. The shared repositories of KYC data mean organizations can use the same verified data, reducing the individual efforts and improving the efficiency also. Then security and scalability of operations has increased with cloud computing. Real-time data verification and updates have become possible with API integration. Then you have NLP-based chatbots and virtual assistants to help the users in completing the KYC procedures and answering the queries on the spot. And lastly, advanced encryption methods have improved the security of sensitive data during transmission and storage, both. Friends, some days back we released a video on compliance officer interview questions also. The thumbnail to that video is showing up on your screen at the moment, and the link is available in the description box below. Do take a look. I'm very sure that video will also be very helpful for your profile. Very soon, I'll get you a video on AML, that is anti-money laundering interview questions also. To make sure you don't miss upon that video, subscribe the channel now. If you have found today's video useful, do give it a thumbs up and share it with your friends also. I'll be back to you with a new video very soon. Till then, bye-bye and take care.